Hey guys, welcome back. You're still tuned into Power Breakfast here on CNBC-TV18. Now, like we were mentioning, Tata Steel is expected to be the stock in focus today. This after the company and the UK government have agreed on a proposal to invest £1.25 billion in Tata Steel's Port Talbot Plant. So Nigel is back with us to really explain the significance of this deal as well as what brokerages now have to say about it. Nigel.
Well, before we get to the deal, let's brief you on the significance of the Tata Steel UK unit. Well, they have the large share in the UK steel market. So in that sense, they had some kind of bargaining power. Tata Steel's UK unit accounts for approximately 14% of Tata Steel's global capacity. And keep in mind, this unit has been profitable just twice and has accumulated losses of more than $2 billion over the past few years. Now, Tata Steel and the UK government, well, they've jointly agreed on an investment proposal and so have announced a plan to invest in a 3 million ton EAF steel capacity. The restructuring plan will entail a total cost of around £1.25 billion, of which Tata's will bear close to 60%, while the UK government will bear close to around 40%. The key reason for this revamp, first of all, is that the existing asset was reaching end of its life and had turned operationally uncompetitive. It is also a step towards the decarbonization drive, given the low carbon footprint of EAF-based plants in comparison to the existing blast furnace-based facility. The key benefits of this capex will be it transforms the UK unit into a sustainable, capital-efficient and profitable business. It will also help to reduce the direct carbon emissions by close to around 50 million tons over the next decade or so. Well, the Tata Steel management, they expect the new facility to see around 150 to 170 pounds per ton of steel savings owing to the reduction in employee and carbon cost. Well, the deal is expected to get finalized and the approvals are expected to come through in the next 3 months. The project is expected to be commissioned in the next 36 months once all the approvals come through. Moving to brokerage reactions, ICICI Securities, well, they believe that this deal is very significant as support from the parent for the UK operations will reduce in future. They also peg an incremental value of close to 10 to 16 rupees per share, assuming different scenarios of cost savings potential. So they have gone ahead, they've raised their valuation multiple and also their target price. Jefferies, well, they believe this investment is a missed opportunity to reduce exposure to the historically high-cost, low-margin geography. They also say that Tata's share of investment implies outflow of around $230 million per year for the next 4 years. They continue with their buy rating with a target price of around 145 rupees per share. Finally, Axis Cap says that several loose ends which remain unresolved, and particularly they're stressing on the employee restructuring cost, which according to them can work out to roughly around 300 million pounds. So they maintain a reduced rating with a target price of around 112 rupees per share. So it's a positive move. The brokerage reaction is a little bit mixed, but I think this is out of the way. So expect the stock to open up in the green. Back to you.
All right, Nigel, thanks a lot for bringing us all of the details on this very important piece. But with that, we are going to get into a break. There's lots more news and updates that we're tracking on the other side, so stay tuned to catch all of that.